Yes, people, in today's video, I just want to speak a little bit about how to master your mind, keep your emotions in check, and the best approach to prop firms coming into 2026. So if you want to make sure that you get all the source from this video, make sure that you watch all the way through to the end. And if you're not subscribed, make sure you do that right now so that you never miss a video from me. Anyway, let's get straight into it. So, first of all is mastering your emotions. And what I mean solely by this is making sure that you've not got anything else going on in your life that's going to affect your trading abilities. You know, you don't want to be worrying about a breakup or, I don't know, family stuff. You kind of just need to shut that out, put it to the side, although it is harder than it's said. That's what you need to do so that you have a clear headspace and then you can think clearly. Moving on from that, you don't want to overcomplicate your trading. And what I mean by this is don't have all these 10, 20 different confluences for your model. Just narrow it down to a small list of confluences that you follow every time, which doesn't overcomplicate your strategy. Set and forget your trades. If you had confidence entering that trade, don't then sit there and manage it. Let that trade run to TP or SL. It's pretty straightforward. Enter the trade, shut your laptop, walk away. Collecting the data. So this is a big one for me because it played a pretty big part in my journey. I never used to collect data, and ever since I did, it gives you a lot more confidence when you're in the market. So, for instance, if you've been trading for, I don't know, 6 months, you've not collected any data, we all did it, we all went through the stage, you get nervous to enter the trade. But if you've collected the data and you've seen that it works over X amount of years, you have the confidence to just execute. And that's such a big thing for me, and I just know that over the course of the year, that said pair is going to be in profit. So I don't think about it, I just enter the trade if it's valid. If it's not valid, I don't enter it, and that's pretty much it. But that's solely down to data collection, and that's how I mastered that, to be honest. Anyway, I made a little graph here, which might help some people out. It's not just all solely trading, but also other things that you can do in your life, stuff like that. Just helps you to, you know, calm down a bit. So pause the video if you want to have a read through that. I'm going to move on. So if you do want to read it, just pause now, and that's that. So moving on, stop thinking about the money. Solely down to the fact that it's not the be all and end all. If you think about money, you're going to think about missing out on trades and then thinking other people are making money off this and I didn't. Let's say someone else is trading a different model and you see them entering it on a TikTok live stream and you think, oh, I need to enter this because it's going to make money, but then you've just broke your plan. Just don't do it. It's just only going to affect your mental in the long run. Another big one that links back to the backtesting as well. Expect to get out what you put in. So the more effort, the more hours in backtesting, the more data you've collected, the more reward. Little effort, little reward, self-explanatory. Constantly thinking about the money will cause FOMO and lead to poor results. That's what we spoke about a minute ago when I said if you see someone taking a trade that isn't a part of your model, you might want to jump on it just to chase the money. Don't do it. Stop caring about losing money. It's inevitable in trading. This is a fact. I had to learn this the hard way. But at the end of the day, it is what it is. You are going to lose money. Those funded accounts are there to be blown. And this is now my prop firm approach for 2026. And this is the big game changer for some of you boys. Don't get me wrong, I've been doing this for the last year anyway. I know that some of you know J Trades, who mentioned this to a lot of you. We both did come from the same background in trading as such, you could say. And this is what we were doing probably over a year ago. So I'm going to run through it. For some of you that have heard the saying in the Discord but don't understand what we're on about, this video, this little section is going to help you out massively. So, first of all, don't be afraid to blow evals. It's only going to delay your progress. And when I mean this is, if you're scared to blow that eval, say you're down 8%, you don't want to place another trade, that trade could be a winning trade, losing trade, doesn't matter. But because you're scared of blowing that account, you're not going to place a trade and then you're not going to make any progress. So what I'm going to do first of all is go down the bad side. Everything in red's bad, everything in green's good. But yeah. So if you're trading one account with all your pairs on that account, it's going to lead to you getting rebalanced. And what I mean by this is sitting around the break-even stage, because one pair's winning, one pair's losing. You might get lucky and all your pairs are winning, but it's a bit of it's one of those kind of things. You know, you've got to kind of diversify. Otherwise, you're just going to get rebalanced all the time, which leads to no progression. This is a little example that I wrote down. So if you're on one account risking 1 to 3, you're going to get 2 wins on gold. This is just examples. So this is fixed 1 to 3. You took 2 wins on gold, 6%. 3 losses on GJ, down 3%. 6% on UJ from 2 wins. And 2 losses on NAS, down 2%. Your total gain on the one account trading these pairs would have been 7% gain, which is good. But if you diversified your pairs into one account per pair, your gold from this same data, your gold will be up 6%. You would have an account in drawdown. UJ would be up 6%, and NAS would be down 2%. But now look, we've got 2 accounts which are around the same percent up instead of the one account from doing all this. And this is why it's so good to diversify pairs, because now you've just doubled your progress just from having an account per pair. Like I said, this is the same trades taken, faster progress and less likely to blow accounts. When I say less likely to blow accounts, if you've got the data like I have, I know that my biggest loss streak on gold that I've seen over 5 years is 5, I think, might be 6. So I know it's only going to go into 6% drawdown, meaning that I'm not going to blow that account. I know my biggest winning period I've seen was 5 or 6, but I think the 6th one was news, so 5 win streak on gold. So I know that these pairs are not going to get blown if you've got that data. Now we're going to move on and go down the good side. So if you bought 10 accounts, say you're trading 10 pairs, you've got 10 accounts, and you pass 2 using the DCA approach while diversifying your pairs, I think you would pass more than 2. I'm not going to say you're going to blow 8 accounts. I feel like you could easily pass 5, maybe 4 or 5, 6 accounts diversifying. Will lead to a payout that will account for the initial cost of all 10 accounts. So what I mean by that, if you bought 10Ks with ACG, that would cost you £300 if you use the code 10K for 40. Say you passed 2 of those accounts, and then you made 3% on each account, which is nothing. We'd be waiting for a payout way after 3%. You'd then get a £600 payout minus the cuts from the 80%, take home, all that shit. Spreads, all that bollocks, whatever you want to say. But you've already then doubled your money. So that's what I'm saying. You bought the 10 accounts, you only passed 2, which is rare. You're going to pass more than 2. And then you got £600 payout. It's just so much better. So that's my full DCA plan. I'm going to do a little zoom in on this so you can read it. If you want to pause that, screenshot it, take notes of that, this is your time to do so. Moving on. This is the last thing I want to touch on. And it is not too much noise, listening to others, hundreds of mentors and groups out there. And it's important that you stick to one. That one doesn't have to be me or Josh or Harry. That can be anyone, Mango, RD, doesn't matter. But just stick to one of them, because it's going to end up confusing you in the long run. Listening to 3 different guys, all preaching different rules, you're going to have more chance of failing, causes confused on what's right from wrong, and it leads to mistakes. And what I mean by this is, for instance, Mango and all RD, all these guys were saying risk 0.5%, never spoke about diversifying, never spoke about anything like this. Whereas me and Josh and Harry are saying 1% risk, diversifying. We're doing completely different things. We've now introduced the LRV model, which I don't know if these boys have. We've got different rules to them, and it's just going to confuse you. And then the good is, if you take one approach, less noise and more chance of success. There's literally nothing else to say on that apart from that, to be honest. But that's pretty much it. If this was helpful to you, make sure you drop a subscription. It would mean the world to me. And make sure, if you are interested in trading a model like ours, liquidity, supply and demand, I'm going to put the Discord link in the bio, in the description, should I say. And it's completely free. So if you do want to have a look in there, feel free to do so, and I'll see you in the next one.